Hello, I'm Martin Smith, and this is your MaxiForex Week in Review. The week was marked by short movements and low volume trading. The run-up to the holidays kept most heavy trading at bay as most investors approached the week with a sense of risk aversion. The week started off with the dollar appearing as the bull amongst the majors, with strong data regarding Treasury yields helping to boost the greenback. In addition to data supporting a strong dollar, both the EU and Great Britain were fighting off poor economic data starting from Monday, which added to the climate of declining risk appetite. Though seeming to strengthen at the beginning of the week, the dollar didn't fare as well versus the yen and the loonie, which just slightly edged out the greenback. For the euro, the debt crisis seems to be a growing concern, and the common currency would have probably taken a bigger hit had there been higher trading volumes this week. But the bad came with the good for the euro. At the same time that Moody's investment firm announced their decision to put Portugal's rating up for review, China's vice premier started that China would be willing to help support European countries who are struggling to repay their debts. This caused a mixed reaction in the market and mostly fluctuation versus the dollar. Overall, the euro lost 0.35% versus the dollar and ended the week at 131.20. At the same time, the British pound was struggling with poor economic data, both from its neighbouring European states and from its own soil. Reports showed that British consumer confidence was at a 4-month low, while net government borrowing rose to £22.8 billion. This is in comparison to £16.7 billion prior. It would likely have been worse, but a slow trading week and China's announcement, coupled with the Bank of England stating its intention to raise interest rates within 6 months' time, all contributed to a very mixed pound throughout the week. The pound-dollar pair opened this week at 155.19 and closed at 154.41, with a loss of 0.5%. In this week's atmosphere, where investors are flocking to safer currencies, the yen seemed to beat out the dollar most days this week. The yen also edged out the euro for very strong gains in a week of low-volume trading, gaining 1.8% over the common currency and strengthening 1.3% versus the dollar. From a technical analysis standpoint, the yen looks really strong against the euro, but versus the dollar, the picture is a little uncertain. The Japanese government announced their intentions to increase their reserves set aside for intervening in the currency market by over $60 billion in the next fiscal year. This is in place to ensure that the dollar-yen does not fall too low in 2011, which would hurt Japanese exporters. As I mentioned earlier, the yen gained 1.3% against the greenback and closed on Friday at 82.88. Now, rising oil prices and good stock market performances this week helped the CAD make gains versus the dollar. Some analysts are predicting that oil will reach $100 per barrel, which would only increase the strength of the loonie. With US growth not appearing to be slowing down, we can expect that the Canadian currency will continue to rise. The US-Canadian dollar pair began the week at 101.28 and closed at 100.79 for a total gain of 0.8%, which is impressive considering the low volume trading this week. Oil rose to its highest level in 2 years this week. February crude gained over 3% on the shortened week and is expected to continue rising. Oil was last trading at $91.51 per barrel. Gold had a less fruitful week, gaining just 0.4% to close trading on Friday at $1,381 per ounce. We hope you enjoyed our weekly review, and we hope you will join us next week. Until next time, be sure to visit us at maxiforex.ru.